Hello everyone, this is the pre-market report video for today 15th March 2024 for the Indian stock market in terms of Nifty and Bank Nifty. After the massive sell-off on Wednesday and despite negative bias close in US market, yesterday Indian market had a relief rally. On Wednesday during the sell-off, there were two sectors that stands and supports the Nifty to some extent. One, FMCG and two, IT stocks. And thus, it's obvious yesterday when market turned bullish, investors' first choice would be those Nifty index stocks. If we see the top 5 Nifty positive contributors, 3 of them were IT stocks, Infosys, TCS and HCL. And surprisingly, yesterday, market was dragged down by banks. If we see the top 5 negative Nifty contributors, then 3 of them were banks. Here, each of those 3 banks got their own negativity. Axis Bank board member resigned and also yesterday they had the investor meet. Then for HDFC Bank, most of the investment firms were downgrading the stocks. So yesterday Nifty opened negative and in the next 2 hours it increased over 200 points and closed positive of near 150 points. Sector wise, except financials, all other sectors closed positive. Oil and gas, metal, IT, media and energy increased around 2% each. Despite this positivity, FII was net sellers in 2 days in a row. Yesterday, the net sold for 1,350 crore rupees, whereas DII net bought for marginal 140 crore rupees. So that's what happened yesterday in Indian market. Then coming to US, before their market opening, US retail sales for February month increased 0.6% in month-on-month basis, which is way above than the contraction in last January month data. Here, though this 0.6% number was bad, but market was expecting a more very bad number around 0.8%. But I won't say it's fortunate, but the number was comparatively better. Please think about it. 0.6% every month increase means then as a compound for a year it will come over 8%. In those cases, then Fed won't reduce the interest rate at all. Regarding new jobless claims, the data was slightly above 2 lakhs and it is less than the analyst estimation. In addition, I missed this macro to highlight in the yesterday's pre-market. US government released the wholesale inflation data for February month. It also comes as against what market wanted. On monthly basis, it increased 0.6% compared with 0.3% increase in previous month and analyst expectation. All these macros, whatever that released last night, showed further evidence of consumer resilience, strong labor market and more stubborn inflation. Thus, all 3 major index in US market had the profit booking and closed negative. Dow Jones down 0.35%, S&P 500 decreased 0.29% and Nasdaq 2 down by 0.3%. In case of US VIX, it increased 4% and moved near 14.5 from around 13.8. Here, please note, in New York Stock Exchange, the advanced liquidity ratio was just 0.26 to 1, meaning roughly for every 1 stock advance, 4 stocks declined. And for Nasdaq, it's 0.32 to 1. Meaning for every 1 stock advance, 3 stocks declined. Hence, though the major index decreased less than 0.5%, the overall US market was crazy negative. Then coming to oil, on the last night IEA's monthly report, they raised their demand concern that expecting tighter oil supply for whole this complete year. This report made the oil price to increase over 1%. At the time of this video, Brent crude closed at around $85 per barrel and WTI crude trading around $81 per barrel. Regarding Indian ADR, inland with the Indian market, both IT stocks closed further positive. However, both banks closed negative. For some reason, HDFC Bank was down over 3%. In Indian market, it was mild negative 0.23%. But in ADR, it's over 3% down. Here, at least there was one comforting news. Usually in US, on the HDFC Bank ADR, their trade volume will be roughly around 4 millions. But yesterday, it was just 2 million. And I did found some US-based teachers fund did some bulk selling in HDFC Bank. Either way, let's hope it won't materialize in Indian market. In case of Wipro's positivity, they entered into agreement for providing banking service to Canada's largest credit union group called Desjardins, who got the assets under management of near 400 billion US dollars. Then about Gift Nifty, US market and banks area negativity completely transferred into it. Today early morning it closed at 22,122. Here yesterday at the time of closing the premium was around 115 points, which I don't think it will sustain. So the more probable scenario is that Gift Nifty will drop to 70 to 80 points premium in the coming days. Either way, today for now it's indicating gap down opening of 120 points. As a summary, US market, Indian ADR and Gift Nifty all not looking good. In addition, yesterday Election Commission released the electoral bond details. If required, please pause and have a look. These are the companies who bought and how much they bought. Luckily, no Adani and nor Ambani. On the listed stock wise, it's Vedanta, SL, Airtel, DLF and Jindal Steel were among the top funders. Again, party-wise also, if required, please pause and have a look. How much money each party got in the last 3-4 year time period. All those were the negatives and indicating the negative trade, but that might turn. Since as per Nuvama report, because of this FITSE rebalancing, today Indian market expect to receive near 14 to 15,000 crore rupees. And HDFC Bank will be the major beneficiary. They expect to receive near 4,000 crore rupees today. Again, not just HDFC Bank, other banks such as ICICI Bank and Kotak Bank, then the stocks such as Sundaram Finance, Zomato, SJVN and Grasim all expect to receive substantial amount. On the other hand, there will be slight money outflow from Reliance, TCS, Airtel and some other stocks. In addition, today during the day, various mutual funds expect to release their stress test results, and also SEBI's chairman's press conference is scheduled in the morning itself, so all those will influence the market. So I won't take any stance, neither negative nor positive. So many variables expects to play today. Moving on, yesterday as per stock open interest, NMDC, Shriram Finance, Axis Bank, SBI, Bank of Baroda, JSW Steel and Bajaj Finance got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, MCX India, REC, BHEL, Bharat Electronics, TVS Motors and Apollo Hospitals got an increase in open interest with a positive price close, indicating the long build-up. About the things to look out, during our market time around 12 to 2:30 p.m., various European countries' inflation such as France and Italy's data are scheduled to release. Then in the aftermarket hours around 6 p.m., India's trade data is scheduled to release. For US market in the night, their consumer sentiment data and their industrial production growth for February month are some of the important items we need to keep an eye out today. Coming to technical, as we discussed, Nifty opened negative, but it increased and maintained that throughout the day. Thus, on the daily chart, it formed a bullish candlestick pattern after forming a long bearish candlestick pattern in the previous session, indicating a pullback rally. However, the sentiment is still negative as Nifty consolidated around the lower half of the previous session's candle. Additionally, Nifty closed below the 21 exponential moving average with a bearish crossover in RSI. So, looking ahead, Nifty is not out of the woods. It might face tough resistance around 22,200 to 22,250 zone. Hence, clearing those resistance, and at the end of today, if Nifty closed back into the rising channel, which we have been discussing the past few trading sessions, Nifty might suggest the possibility of a bullish trend reversal. And for the near term, the immediate support level is around 22,050 to 22,000. Then in case of Bank Nifty, it opened 160 points gap down and extended its downward journey with lower high lower low formation for the fourth consecutive session, but finally managed to close near the opening level. Thus, on the daily chart, Bank Nifty formed a doji kind of candlestick pattern, indicating indecisiveness among buyers and sellers. And also, it defended 50-day exponential moving average 46,600. Hence, the lower end support is situated at 46,700 to 46,500 zone, and a break below this level on a closing basis could intensify downward momentum towards the 46,000 mark. On the upside, immediate resistance is around 47,500 mark, and a conclusive break above this level on a closing basis would signal a resumption of upward momentum towards all-time highs. As per the weekly options data, the maximum call option open interest was at 22,200 strike, followed by 22,300 to 22,500 strikes, with meaningful new call option writing at 22,200 strike. Whereas on the put side, the maximum open interest was at 22,100 strike, followed by 22,000 and 21,900 strike, with new put option writing at similar strikes in similar sequence. Thus, from the options data, 22,100 to 22,200 is expected to be the key area for Nifty for further direction, with a hurdle on the higher side at 22,500 level and support at 21,900 mark. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.